Welcome back to Market Master Roland Attenborough. Today we're looking at Bitcoin and the relationship that it's having right now on the square. And I've been stating to you in a previous video from our low at this 60,000 to this top here, May 5th or May 6th at 82,000, that we would be seeing a pullback, sell in May and go away. And I wanted to point out that with all the hype going on in the market, we're still in a bear market, and not breaking above these areas is an indication that the market is showing weakness. With that, moving down, we've been making lower tops and now lower lows, and we've done again another lower top with yet again another lower low. And this is indicative of weakness and a change in trend in where we could see possibly the market move lower. How much lower? Well, in our previous tutorials, we've been speaking about this lower 40 area or mid 40 area for that matter. Doesn't mean we have to stay in the mid or high part of the 40s. However, a move down to this white angle here, that's moving an aggressive point down here, which is again parallel with our other trend lines here. We've pointed out that each time the market comes down and makes a angular connection with this angle here, we've showed this in the two previous ones, like we did here for the May, for this topping pattern that was completed. So from here, this completed and showed us that a topping pattern was in fact in place. So we've done that already with one. We've also did that with our first downturn and corrective model, where we had the same angle. It's the very same movement down, the same velocity, and then we just simply put our straight angle on here and it defined our next top. So these two have been intact, and looking at them, it's evidence that we could see a possible third movement similar. Does that mean that that has to happen? Well, no, it doesn't really mean it has to happen. However, the last two have produced a model which shows us the next top, and right now I've just populated this on the 3rd and 4th of July here. Doesn't necessarily mean that that's what it needs to be. We could essentially be saying that if that were to be true, then September 10th would be our next swing top, potentially. And of course we could swing back up from that low area around this 48. Not saying that it has to be there, but it seems very likely and possible we could make it down to 48 and 45 before seeing another resumption of the bear market rally, and we could come back up and retest this underbelly, which we've seen many times before in previous campaigns. So pointing that out, we're just having a moment to re-look over the chart just to reconfirm whether or not we're seeing the evidence of another bear market rally beginning now, or if we're going to see the resumption of some major volatility and another leg down to these possible low target areas that we've been discussing over several months. And we're just patiently watching to see how this unfolds after our time frame here in this July 4th area, because we've pointed out this is a point that has 270 days, or 3/4 of a circle, from our October top. It's also 225 days from our November bottom at 79K. We have two major bodies that will be conjunct Mars, the planet of energy, war, action, will be conjunct the planet of Uranus, which is associated with change, volatility, but mostly is associated with technology and transportation. Our June 28th, which we've just passed over, is 144 days from our February 4th low at 60 and 59,000. So another extreme point here, right here in this 28th. So for a change in trend. Next and last, we have July 4th is 60 degrees from the May 5th swing top. Sell in May and go away. You guys probably remember me talking about this sell in May and go away. And right now, if you were to miss that video or tutorial, suggest you maybe go back and have a look, because I state a lot of things before they happen, and I calmly stick to my analysis, and it's just something that I stick to. I try not to listen to the market rhetoric and the news coming, because I find that a lot of it is really just noise, and it captures traders off guard, and I think it affects their thought pattern and their nervous system, and they get biased as to what the market is doing or will do. So we just take it from a perspective that we're looking at things from a mathematical point of view. We look at the cycle counts. We look at the geometric structure. We measure it on our natural square scientific forecasting instrument. We use the past movement of Bitcoin to make logical and sensible determinations, and therefore we remove our human emotion of wanting it to move in whichever direction the market or the behavior of traders seem to be guided by. So with that in mind, we're just trying to be careful not to get caught up in the news and the hype that goes on in the market. And let's just take another look at the percentage level of what we can see, because the past two moves down from our October top have been about 36 and 38%. Oh, sorry, I didn't get that right on there properly. So the previous moves have been approximately 36% and as high as about 38%. So that would take us down to about a clean 51K. And looking at this, you can see the halfway point on our counter here, or our measuring tool, is showing the top of this. Right, here's our little bear market channel again, and the resistance level inside that. Now, does that mean that has to be what will happen? Well, not necessarily. However, we have lower lows and lower tops. And William Gann speaks very strongly that when the market starts to show that it's making lower tops and lower lows, that the trend is down. Could we have a relief rally from that? Certainly. At any time, we could have a 7 to 10 day rally, or a 21-day rally, or even for that matter, a 43-day rally. These are all points on the natural square that we look at and we measure our rallies and our time frames from. So let's just take a look at a time frame from this May top here, and let's just maybe, so I'm stating that a 7 to 10 day rally. So again, 7 to 10 days here. We had a secondary top, and then it started to get weak, and then we had the rollover. And the rollover went into and lasted up to and close to 20 and 21 days before resuming the move down again. What about after our next move on the square at 43 days? Well, after 43 days, or 41, 42, where we start to get into the death zone of the square, again, we started to make a lower high here. Right? We just couldn't get back above the high that was made here on the 15th of June. We've subsequently put in a lower top again right here on the 22nd, and now we're moving down again, making lower lows. Where's our next point on the square? Well, 73 is the next death zone, and that points to July 18th. Is that where we'll be, in July? Well, the market is starting to shed some strength. The energy of this market has got down right near our low of the market, where we saw 59,000 in February. So it is possible and likely we make it down to this area. Not saying that we have to, but looking at the past history here, we are now closing. We've made closes below this area here, or sorry, not below it, my correction on that. We've made closes that seem to be right at this area, and this is indicating a lot of weakness here. We're coming right back to this area here. If we were to get a move down and a close and a headbutt underneath this, this would reconfirm our thesis that the market is still in a bear market campaign and will continue to be weak and make moves possibly down lower into these mid and low 40s. And again, we've stated in several of our tutorials that we could get down into the low 30s here, and this is what Bitcoin has done before. So let's just move this out of the way. So our 12th month is right in here, beginning around the 5th and 6th, and that's at 42,000. Our 13th month brings us into November, and typically the market has made 13 and a half months as an average, which would bring us into about the third week of November, where we would we could see this 38,000, and 38,000 is on the opposite side of the chart from the square of 9 at 126. Not saying we have to go down to that level, however, it's very possible, and it's likely that we could see these lower prices before we get a resumption of the distribution of Bitcoin, and the buyers get comfortable that that's a relatively safe price and a fair price for Bitcoin, whereby we also have the midterms coming in, so there's always a lot of uncertainty when we have midterms and elections, and it's typically quite tough on investors and the market in general. So this point in the year is a time frame where we would be suggesting that the market would likely find equilibrium and a low, and distribution would be completed or near complete, and we would begin on our new cycle. And if you've been following along on my cycle analysis of what we would expect from this November bottom, we've stated that this would most likely, looking at the monthly chart, if we were to just flip over to that, let's just take this and let's just hide that. So if we were to have the reoccurrence of a low in this, let's just say the November. Let's go to November because that's the month October is our 12th month, but our 13 and a half months would be into the November. So let's just take that and let's just go out, because I've been stating that the market has a bull market that lasts about 1,065 days. So that would take us into the time frame of September and October 2029, sorry. I just wanted to point that out, that we would be repeating a cycle, in my opinion, that rhymes with that time frame. And of course, you know very much that in 1929, that cycle ran out very, very harshly, and we did see lows come in 1932 and 31, where the market began to show the distribution cycle. So just again, looking back over, our cycle analysis has shown us that in the past campaigns, the market has ran out around the 1,000 to 1,065 days. Within a week or two, we've seen these lows in the three campaigns. If you've been watching our channel, you know that we're calling for a top in Bitcoin for when the August area. I'd be looking to exit Bitcoin in August, and certainly before September or thereabout, but the top is about to come in based upon a November prognosis for the low. We would see something out by October 2029, and so here I am again. I told you when the top was coming in. I told you when this low was coming in, the 12, 13, and 14 months from the top, and I just wanted to point that out to you because, using the past model here, so let's just go have a look at some of the tools that we would use. This bars pattern is a tool that we would use here, and let's just put it on here, and we'll just bring it out. We'll just bring it out to here, but so you can see what we're talking about when we say, we're lining up these tops here. Okay, we'll move this one back. So again, this October and November would produce tops that we could essentially see, you know, a low or something close to that. We're not we're not stating for sure that that will happen. We're just saying that from history we have seen that type of a low, and I'm just going to move this out of the way here. So looking at this from these low areas, because I've called out this low at just under 15,000. I was expecting it to be around the 17 to 12,000 low, and of course 15 was the median low for that, and 15,000 is a 90-degree angle from 69,000 on our natural square. So looking at that, we have made a determination that from the three past models, we expect a 12 and 13 and 14 month bottom. And then of course from there, our tops have been, as I said, watch out in October, you know, it's 1,065 days. So looking at that, you know, this points out. So let's just go ahead and let's just use our bars pattern here, and let's get a check in on what we can see for a low and a top. So that's 1 month too far, so let's just come back 1 month here. So setting it up on November of 2026, we are expecting that a top would come in, right? August, so starting maybe as soon as July. Not saying it has to be, however, it's possible that could happen. However, we expect that you know, from August, September, and into this October would produce these types of tops. And of course, back in 1929, the market topped out in October, and you can see that on my S&P chart that I did before, where I show the market top there, culminating in the 2029, similar to the 1929 October top. So I just wanted to point out that we are able to zero in on changes in trend based upon Gann's work when we use time cycles, and he stated many times in his books and courses that time is much more important than price. So utilizing the fact that time is more important, we therefore use the metrics of past movements, and we use them as a gauge stick to measure where we think these changes take place. Now, doesn't mean that it has to be exactly the exact same. It just means that we're looking for something that rhymes, or a similar pattern of time to take place before traders become more confident or less fearful, and then decide to roll back into stocks or commodities and crypto markets alike. I hope that you've enjoyed this tutorial. This is just some of the tools that you should be utilizing, because time is more important than price, and that's what we're measuring, is time. Anyways, peace and love, brothers and sisters, and you can hit me up anytime. Peace and